This is probably the most hated bull market that anybody has ever seen, and it continues to be the most hated bull market that anybody has ever seen. But don't fight the tape, because that's what loses you money. And macro people, from the time I joined in '05, were very bearish because they thought it was a housing bubble. But they were shorting it from '05. So by the time '08 rolled around, they couldn't be short anymore, because they had lost so much money being short. People have been calling this thing a bubble for a long time here. And like I say, if you've been short based on that idea, you're hurting.
Market momentum doesn't look like it's stalling. The S&P 500 is now firmly above 6,800 points. Bitcoin is now above 93,000 on the 3rd of December, much higher than it was a month ago. Gold and silver continue to pump up to unprecedented levels. So what's next for markets? Is there a top forming? We'll find out with the next guest, Jason Shapiro, founder of Crowded Market Report, veteran trader of over 30 years, and he's been featured in Jack Schweiger's book, Unknown Market Wizards. He's a regular on my show. Check out our last interview with Jason, link down below, so you can see the number of correct calls he's made all throughout the year. This episode is brought to you by Kalshi, the largest prediction market in the United States. It is a fully regulated platform that lets you trade on real-world events, so you can trade on political outcomes and economic and financial events as well. And we're going to be going over a lot of these events with Jason, including where the S&P 500 is headed by the end of the year, what the Fed's going to do by the end of the year, who may be the new Fed chair. People are placing trades on that outcome. And what is oil going to do? All very topical trades that you can find on Kalshi and that we're going to be examining with a real trader, Jason, today. Kalshi recently also raised $1 billion in Series E funding at an $11 billion valuation. Go to my link down below or scan the QR code here. Use my promo code LIN, L-I-N, and then when you use my promo code, you'll get $10 on your first $100 deposit when you sign up to Kalshi. Jason, welcome to the show. Good to see you again. Welcome back.
Thanks, David. Good to see you too.
Well, with that said, let's talk about current sentiment. Let's talk about what positioning you're looking at right now and where the crowd is currently sitting. Because like I mentioned in the introduction, everything's going up yet again.
It's bull market. So, that tends to be what happens in a bull market is the markets go up, and I feel like you, me, everyone you talk to, everyone I talk to, everyone talks to, spends an inordinate amount of time talking about where the top is going to be, and I think that indicates the sentiment best. We've been saying for a long time, this is probably the most hated bull market that anybody has ever seen. And it continues to be the most hated bull market that anybody has ever seen. And as soon as it pulls back 3, 4, 5%, it's like, the perma bears come out. This is it. It's over. And they come out with their new reasons, whether it's the AI bubble or the Japanese carry trade or MSTR and Bitcoin, it's always something that is going to crash the market. So I personally think that continues to be where sentiment is. And I think people spend way too much time trying to figure out where the top is. Even if you're great, you're probably not going to get the exact top. So why bother? You're just selling and watching the market go in your face again. So, the market is in a bull market the majority of the time, David. So it's like a exercise of futility, trying to just all the time be bearish and talk about why it's going to top and talk about this. And it's silly, quite frankly. And you continue to have, passive flows come in every month from everybody's 401k or whatever it is. So there's a continual amount of money that goes into the market and theoretically is not going to stop. And we continue to have central banks and governments the world over pushing the liquidity trade, which is just creating more money that can find its way into the markets. So I don't know. I keep saying if you're fighting, and it will top, obviously, at some point, the market will go down at some point, I think. But, to be betting on that is you're fighting the Fed, which has always been a no-no. You are fighting City Hall, meaning the governments who are pushing liquidity, and you are fighting the tape. So you're going to get what you pay for if that's the way you're going to do this.
One of the things you do as a trader is to look at where the crowd is positioned. So if everybody is overwhelmingly feeling bearish, or the market or participants are feeling overwhelmingly bullish, and no one's talking about a potential pullback or a recession or a bear market, then you might consider taking the opposite side of the bet. Are we there yet? I
don't believe that we are there yet. No.
Mm-hmm. Okay. There's
a few things.
Yeah.
This is really more coming from, I don't just try to look at, hey, what everybody else is. I also try to think about what I'm thinking or saying, because that's the most honest way to figure out what people are thinking, because my emotions and my reactions, I don't think are necessarily any different than anybody else's. So when I look at what I'm thinking and all that, it's this idea of like that the thing that would make me nervous about it is it almost feels to me like there's no way the market can go down, because if it does go down, then they're going to come in and then they're going to support it again, right? They're going to print more money and, and all that. So if they do that, then the market goes right back up. So why would the market ever go down if people know that if it does, they're just going to support it and push it back up again, right? So it kind of feels like there can't really be any large down move. So that thought process, if someone else said that, I would be very nervous. And I'm saying that, so it makes me just as nervous, because I don't think I'm any smarter than anybody else. So that's the one thing that makes me nervous. But other than, I don't know that is necessarily at this point a consensus belief.
Well, the best traders are the ones that are aware of their own intelligence and don't think that they're smarter than everybody else. So you're on the right track there.
Yeah, no, that's a fact. Because you not only have to be smarter than everybody else, you have to be, if that's the way you're going to play it, you have to be smarter than everybody else combined. Because that's what's in the price of an asset, is what everybody in the world thinks combined. So you're not going to be that smart, unfortunately.
When it comes to positioning, I know you look at the commitment of traders reports, you look at options, and then what about prediction markets? They've been hitting mainstream news. So this one's from Kalshi, and if you take a look at they have a number of different categories here. I'm just going to the financials, and they have, how it works is they poll people on certain topics, and then here it's S&P close price end of 2025, and people can trade on this particular outcome instead of just trading on the S&P directly. There's also economic events, right? But I want to focus on this in particular right now, just for the sake of this particular question. So right now you've got 6,600 to 6,800, 17% chance. The majority, 40% chance, thinks 6,800 to 7,000, which is slightly higher from current levels. And then you've got a 30% secondary majority thinking that it's going to go above 7,000. So bullish to super bullish. That's how this particular platform's participants are feeling, which I think is probably a good reflection of the overall market right now. What do you think? I mean, do you look at stuff like this and think to yourself, okay, well, I mean, it's an easy way to piece crowded sentiment together. If everybody, let's say if this isn't 40%, let's say if it's 90%, then you're probably thinking, gee, I need to think about some stuff here, right?
If money is actually being put to work on that, a poll is one thing. A poll is a poll, doesn't mean a lot to me.
It is a poll, but they're trading. So the payoff is slightly higher for no, because there's a higher payoff for no, because it's not a majority. So yeah, it's basically
40% of the people are essentially saying
markets are going to be flat and up.
Yeah, they're basically right here or slightly up, right?
Yeah.
So I don't know if I'm going to call that massive euphoria, but I haven't looked a lot into this, but I think that it's definitely interesting. I don't know how big the spreads are, how wide the spreads are or anything. I think that probably off the top of my head, the most interesting thing that can be done with this right now, since it's new or new-ish, and since there's probably a lot of money that can't really play on this game yet, the hedge fund money probably isn't set up to play this game yet. There's probably some arbitrage opportunities if the spreads are tight enough here between these type of markets and the actual markets. Like the percentage chance that the Fed is going to cut rates in December or something is a mathematical number you can figure out in the markets and play in the markets mathematically. And then if you could take the other side in this particular place where the number or the odds was different, you could probably arb it out. It was kind of like the early days of Bitcoin and all that, where different exchanges had different prices. And I knew some people that were arbing on two exchanges because it was new and the liquidity at the various places weren't there. So that, I think, might be a very interesting thing that can be done in these type of things.
I wanted to bring this to your attention because prediction markets like Kalshi have been making mainstream news, not just because of people trading on S&P 500 results by the end of the year, but particularly their election trades, which
Right.
party who will Trump nominate as Fed chair. Trump out as president this year, 1%. These presidential elections or mayoral elections, like Madani in New York, for example, the trades that people have placed on those outcomes have been spot on. And so basically, the closer you get to the actual event of the election, let's say, if the odds are overwhelmingly in one outcome's favor, like in this case, who will Trump nominate as Fed chair? Kevin Hassett. I think this is by next January. Yeah, January 2020. I think I meant before. Yeah. The next. I think that's supposed to be 2026. But anyway, the markets have pretty much been spot on giving outcomes. And so as a trader, you look at this and you think, okay, well, if there's a proven track record for not just this platform, but multiple platforms where traders and people placing trades go here and basically predict outcomes, and their predictions are spot on, well, I can use this to my advantage. I could basically front run the outcome, even though that's how markets are positioned already. I mean, this is a game-changing kind of tool, because prior to this, we had to use other indirect indicators like positioning and options and other reports and whatnot to gauge how people are feeling about Trump versus Biden, for example. We had to rely on polls, which we know are very inaccurate. But markets have called the presidential election. They've called mayoral elections. They've called every single Fed rate cut or hike or decision. And let's see if they're right about Kevin Hassett being Fed chair.
No, I think
how do you use this? Yeah.
I think it's super interesting. Yeah, and I think, okay, so Kevin Hassett's going to be the Fed chair, according to this thing, okay? Well, what do we know about Kevin Hassett, and what do we think he's going to do? And then you have to say, and what is the market thinking is going to happen for that? He's probably going to be, more on the dovish side. So you would want to bet that interest rates were going to come down. Well, how are you going to bet that? You now have a number of ways to bet that. You can do that in the bond markets. That's the most direct way. In particular, on the short end of the bond markets would be the most direct way. But now you want to figure out, if we are going to equate it, there's an 82% chance that he's going to win, according to this thing, if I'm seeing it right? Well, what is the market saying is the chance that there's going to be interest rate cuts? Well, December we know is like 90%, but he's not going to be in December. So the question is, is the market pricing in that there will be a rate cut once he gets in? I would bet it's probably really close to that 82%. So I don't know where you get the edge there, but there could be. I would think if you search through enough of these things and do enough scenarios, there might be a way to get the edge. I mean, it's the old, wisdom of crowds thing, right? Which is what this really is. That's why they get it right so much. Is it's the wisdom of crowds. The crowd knows, right?
I'm just curious how this stacks up with. So this is Fed decision by December. Fed Watch tool. Let me just go to the CME Fed Watch tool and get the percentage there. So this obviously is something that people use, but so you have 89% chance. Right. So right now we're at right now we're at 350, 375, 80. That's interesting. Okay. Because right now we're at 375 to 400. Yeah. So we're looking at 89% chance of a 25 basis point cut.
Right. Which isn't this guy anyway, because he won't be in office yet. But
yeah, and now this is looking at 93. So the market, the bond market here, the CME Fed Watch tool, plus prediction markets, both think that there's going to be an overwhelming chance the Fed's going to cut once more by December.
Yes.
So you can use tools like this to, I don't know how much alpha you're going to get if the entire market is already positioned like this, but it is interesting to look at these kinds of indicators and position yourself accordingly, because if the track record is pretty much perfect,
these guys are saying 93%. These guys are saying 93% chance.
Correct.
Whereas the Fed Watch tool is
saying 89.
89. So there's a 4% difference. So again, I don't know what the bid-ask spread is on any of these type of bets, but if it were super tight, then you could lock in a 4% arbitrage profit there, right?
Wait, how would that work?
Well, if you could buy the 89% chance on the CME and you could sell the 94% chance on this one, right?
Yeah.
Then you've just bought 89 and sold 94.
True.
So I would bet that the bid-ask on, once you got the bid-ask spread on both of those things, that would probably go away. Without knowing a single thing about it, I would bet if you executed that trade, the slippage or from the bid-ask spread and all that would be very, very close to 4%.
Okay, let's just take something else just for the sake of fun, and then we'll move on to something else here. I'm just clicking on something. Gas prices in the U.S. this month. So again, the overwhelming majority of people on this particular trade are predicting above $2.90. Is this per gallon? This must be per gallon. $2.90 per gallon. $2.95. Above 3. Above 2.85. Yeah. I mean, people are putting their own money to work on this, so we're not getting ridiculous answers.
Yeah.
So we get a pretty conservative outcome here. This is just an easy way to see how markets are positioned. So, I mean, this or options or the commitment of traders reports, you look at something like this, and what do you do with that?
Like I say, the first thing to do is look for if there's a big divergence between this and the markets, which I would think that there wouldn't be, but there could be. And try and find an arb in there, I think would be the first thing I would do, is look for an arb in there if you could. That'd be the best thing to do, I think. But like we were saying, you could then take it to the second derivative. Okay. Hey, the markets are saying that this guy is going to be the Fed chief. Okay. Well, we know that this guy as the Fed chief is going to be dovish. And if that's the case, and we're going to get this dovish Fed chief in, then that is arguably whatever for bonds, right? And you could take it to the next derivative. If he's going to be dovish, that's probably going to be a good thing for stocks, right? So I'd be wanting to play the stock market to the long side if I were believing that dovishness was good for the stock market. Of course, what you really want to do is say, okay, I think that dovishness is good for the stock market, but am I saying anything that everybody else isn't already positioned for, is the question, right? That's always the real question, right? And you just let the market will tell you that anyway. But so then the interesting thing becomes if for me, the way that I trade, the way that I handle the markets, if this guy becomes the Fed chief, everybody was expecting him to become the Fed chief. Everybody believes that he is going to be dovish. Okay. So now the day comes and it is announced that he is going to be the Fed chief. Well, where is the market when that comes out? Did it run up in front of that announcement because everybody knew that announcement? And B, how does the market react to that news? Right, that should be bullish news.
Sure.
From what we just said. So how did the market react? It's bullish news, but what's the market done? What's it discounted in beforehand, right? The market's a discounting mechanism. So what has it discounted in before that, right? Is it bullish news if the market's at 7,000 already? Is it bullish news if the S&P is at 7,500? Is it bullish news if the S&P is at 8,000? I mean, at some point, that's already discounted in, right? And we don't know the number, but for me, I look at A, the positioning, and B, as a way of what's discounted in, and B, how the market actually reacts to the news. Those, to me, are the important things.
Mm-hmm. How are you positioned right now as a trader? I mean, people who trade directly in the stock markets are kind of indirectly doing this. They're making a mental note as to what the S&P is going to do by a certain time frame. I know maybe that's not, you don't pick tops and bottoms, but let's say you have to, here's the S&P 500 chart, right? We're at 68.51. And then you make a mental note to yourself, basically what this particular prediction is doing. Where is the S&P going to close by 2025? Where would you sit if you had to place a trade here? 66 to 68, 68 to 7,000, above 7,000. Where would you sit?
Yeah, I mean, this is the good thing, I think, about trading the market rather than trading these things, right?
Yeah.
Because I don't have any skill set whatsoever in predicting where the market's going to be at a certain time, right? Okay. I'm a directional trader. I will be either long or short something, but I don't know. I don't have to worry. If I'm long, I just need to go up, obviously, right? I don't know how much it's going to go up. I would prefer if it went up a lot if I'm long, but I don't know how much it's going to go up. So this is sort of the disadvantage to these people is they could get the direction right, but the amount wrong and lose money. If I get long the S&P right here and it goes up 2 points between now and the end of the year, well, then at least I made 2 points, right? Where these people that are betting it's going to be up 100 or 200 or whatever, they lose. The market went up 2 points from where they bought it, and they lost all their money because it's a bet, right? It's binary. Either you're right or you're wrong. You get paid or you don't, right?
Right.
So this is more like an option market than anything else, which is why, quite frankly, I don't trade options because I'm not. That's not where I find my skill set to be. For me, options is more about being able to predict volatility than anything else. I don't have a skill set in predicting the volatility of an asset. So with this, it's the same thing. My process tries to find where there's good risk reward directionally, but has no claim to be able to know how much that is going to be, even when right. The hope is that it's more than I think. The reality is it's probably less than I think. But if I can get it right, then over time I'll be fine. So, that's what I would say about that. It's a different bet. This is an options bet. It looks like more than a directional sort of futures bet to me.
Well, let's move on to the markets themselves then. So let's get your take on stocks, particularly tech stocks and Bitcoin right now. So people were talking about mainstream news and actually social media were basically lit up with fears of an AI bubble popping all throughout November. Remember when NVIDIA was going down? It still hasn't recovered from its all-time top. And people were talking about this bursting. And despite all this chatter, the NASDAQ composite is still edging higher, still not at its late October high, but rebounded from its mid-November lows. Now, when you hear chatter that there is a bubble, that even executives of tech companies themselves have used the word bubble to describe the current situation. And yet the market continues to ignore that. What does that signal to you?
I think it's silly. Everybody talks bubble every day, bubble. Let's say that you are convinced that it is a bubble.
Sure.
Okay. Good for you. And let's say you have all the evidence in the world that can prove beyond the shadow of a doubt that it's a bubble, which you don't have, but let's say you did. Okay, good for you. And you had that evidence this whole time. Okay, well, then you would have been short this whole time and you would have been losing money. First of all, if it's a bubble, what does that imply? That it's going to drop 80%? Isn't that what a bubble does, right? A bubble drops 80%. Isn't that what we're saying? So if the market is going, if you are correct and it's a bubble and the market is going to drop 80%, then I don't know why you're in such a rush to get short. You know, because the market is touching very close here anyway to all-time highs. And I've been saying this all along. I'm happy to make the argument that it's a bubble, and I'm happy to make the argument that it's not a bubble. But if it's a bubble and we're going to drop 80%, then I don't know why you have to sell so close to all-time highs. Let the market start to act poorly first, right? Even if you got to sell it down 10% off all-time highs, well, you still got 80% to go. So what's the difference? Don't fight the tape is my point, right? No matter what your belief is, I always say this, no matter how you trade, it doesn't matter. Don't fight the tape. That's all I'm saying. Be bullish, be bearish. I don't care. Have your reasons. I don't care. I'm sure there are great reasons to be either one. But don't fight the tape, because that's what loses you money. And like I say, if it's a bubble and you're correct, then you got plenty of room to run. You know, people have been calling this thing a bubble for a long time here. And like I say, if you've been short based on that idea, you're hurting. You know, you're going to end up getting to the point where you're broke, and then the bubble does hit. And I saw that in 08. You know, I worked at a pretty large hedge fund in 05, 06, 07, 08. And the macro people, from the time I joined in 05, were very bearish because they thought it was a housing bubble. And they were very bearish. And as it turned out, they were totally correct. It was a housing bubble, and the market did crash. But they were shorting it from 05. So by the time 08 rolled around, they couldn't be short anymore because they had lost so much money being short. So they weren't able to take advantage of it in 08. Even the famous, Big Short movie guy, he caught that, but he too was lucky that his investors didn't shut him down, because he had been shorting it for 3 years and losing money for 3 years, and that's a very hard thing to do when you have investors who are going to be, breathing down your neck, first of all. And second of all, when it's actually your money, it's even harder, because now you're losing money for 3 years. You're telling me that if you would have been shorting the market from 05 to 08 because you thought it was a housing bubble and you were losing money that whole time, that you would have stuck with it? I don't think you would have, So the point being, you have to wait until the market agrees with you. And then by all means, short it because it's a bubble. If in 10 years, this market is, 60% lower than it is now, could we look back to now and say, well, gee, the signs were there? Yes, we could. Certainly. There's certainly signs of that, some of the valuation stuff and the whole thing with the AI and all that. We could certainly look back and point to signs, sure. But the one sign you can't point to is that the market doesn't go down. So why not wait until that? The other thing I would say is each bubble, I've been through a few of them, is different. And if you really look at what's gone on here over the last few months, you've had a lot of these stocks drop 40, 50, 60, 70%. I understand NVIDIA hasn't, but a lot of the more bubbly, for lack of a better word, type of names have dropped a lot, and kind of did do a bubble thing. Oklo was a great stock, probably dropped, 50, 60% in the last 6-7 weeks or something like that. I did say on Twitter, like the other day, what is a crash? Is it 40%? Is it 60%? Is it 80%? I don't know what the definition of a crash is, but a lot of these stocks have crashed. A lot of these bubbly type stocks have in fact crashed. Not all of them. Nvidia hasn't. But the other ones certainly have. You know, a few of them, more than a few of them, have certainly crashed. These sort of ones that were most in favor the first half of the year, like this Goldman Sachs, you know, what do they call it? Low quality name index type of thing, which all these stocks that weren't making any money but were benefiting from the hype of AI, and they were up 200, 300%, 400. Those things have come down a lot, you know, 50, 60% is a lot, you know. So in a way, we've sort of had a correction in there, a big correction, a big bear market in a lot of those names that I don't hear a lot of people talking about. They all want to focus on NVIDIA, but a lot of these other names have, in fact, for lack of a better word, crashed, and the bubble has been popped. So that's another way to look at it, I think.
Let's take a look at, well, you said the stocks are currently in a bull market. You said that in the very beginning of the interview. Let's take a look at Bitcoin then. Is Bitcoin currently still in the bull market? I mean, it was, and then it corrected somewhat, and now it's kind of consolidating around its November bottom. But what have people been telling you about Bitcoin?
Bitcoin's a tough one, you know, because it's become like religion. You know, there are the people who believe in Bitcoin as the future of the global payments system. And I can't argue with them because, quite frankly, I don't know enough about it. I don't sit here. First of all, I don't really trade Bitcoin. I own a little bit of Bitcoin, not in the accounts that I manage for others, but in like my personal accounts, I own a little bit of Bitcoin. But I don't know. I'm no expert on it. But we have these people who believe very strongly in the religion of Bitcoin, and they're probably never going to sell. Some of those people have been successful in the past, and some of those people that I know have had tremendous failures throughout their entire careers and have been nothing but fades throughout their entire careers. So I really don't have a great read on what Bitcoin is going to do, or whether it certainly isn't in a bull market anymore, but it could be again soon. What I did notice, I was looking last night, or 2 days ago, because when Bitcoin was having all its trouble on Monday. Since the first Bitcoin ETF started trading, the exact numbers aren't in front of me, but since that day, let's pick that day rather than pick random days, because you tell people, oh, Bitcoin is down on the year and has underperformed stocks, and people say, oh, but go back 5 years and Bitcoin is up, 10,000% and outperforms everything. Yeah. So rather than pick some random day, what about the day? I think the day that you could buy the ETF, because I think that was a game-changing day for Bitcoin. Because up until that point, you had to sort of take some risks that most people don't want to take, right? You had to open up this online wallet and buy it on some exchange that was owned by people that had proven to be doing some pretty dodgy things, like, Sam Bankman-Fried or whatever. You had to put your trust in these things. You could get hacked, right? And whatever Bitcoin you had could get stolen and all that. So you had to take excess risk to buy Bitcoin back in those days. And with excess risk comes the possibility of excess returns. In fact, over time, financial theory will tell you if you want to earn excess returns, you have to take excess risk. It's pretty simple. Once the Bitcoin ETF started, you no longer really had to take excess risk in Bitcoin. And since that day, Bitcoin has underperformed pretty much everything. The stock market, gold, silver, just about everything. It's up.
Yeah, that was January 2024 was the first spot Bitcoin ETF. So
it's up since then, right? But it's up a lot less than other assets. It's up less than stock. It's up less than gold. So it hasn't been that great an investment since that day. Since they took the excess risk out of it, it really hasn't been that great an investment. Will that change? Well,
Well, hang on. Sorry. It's since 2024, it's beaten stocks. I think you're talking about since 2025, it's underperformed everything else.
Well, I was looking from the first day that first IBIT came out.
IBIT. Okay, let's specifically look at, because the first spot Bitcoin ETF launch was okay. Let's actually, I don't know, when was the IBIT Bitcoin ETF launched. Let's look it up together.
January 11th, 2024.
Yeah.
So what has Bitcoin done since January 11th, 2024?
It's about 120% since January 2024. Yeah, NASDAQ's up 57 on my screen.
Oh, well, then I'm glad you pointed this out to me, because maybe I got to go back and do some more homework, because I had it wrong. But when I was looking at it on Monday, I had it. I did not have that.
Well, you're right about 2025. It's underperformed, but if you go back since 2024, it's beaten stocks by quite a lot. So yeah, if you start from January 2024, it's up 114%, and then NASDAQ's up 55%. Let's just take a look at gold, see how gold's done during the same period. Gold is up 102%, so very close to Bitcoin.
Okay, well then, look, if that's correct, then I stand corrected. So you can just discount everything I just said about that.
Well, that's all right. Your point still stands. It's lagged behind some stocks, especially this year. If you want to talk about this year in particular, and that's what's been puzzling to people. Because even though if you go all the way back to 2024, which is a long time for Bitcoin's only been around for 14 years, right? So if you take a 2-year history, that's a big chunk of its history. It's outperformed everything else that we talked about. But this year, I think what people are wondering is, why is it? If you look at the blue line here, that's Bitcoin. You look at gold, that's green, and then you look at the NASDAQ composite, that's the bar chart here. And even though Bitcoin still kind of follows the NASDAQ on a correlation basis, the beta on the downside is a lot higher. So the NASDAQ has corrected somewhat between late September and October. Bitcoin has followed that, but just went down a lot more and hasn't really gone back up. And so people are wondering, okay, well, is the capital going to somewhere else? Is it done? I mean, people just sold off on Bitcoin and rotated into something else, and party's over for now. That's what the Bitcoin community is kind of wondering right now.
Yeah, and I wish I had the answer for them. But like I say, I'm no Bitcoin expert, so
sure.
I couldn't tell you.
What do you think about gold? What do you think about this green line that's just, it doesn't stop? It's this straight line up from 2024. If you want to start from 2024, I mean, look at what it's done. It's just a straight line, basically up.
Going back to what we were talking about before, if we're living in a world where central bank policy and fiscal policy is to just continually, in one form or another, print money, then clearly, and this is what the Bitcoiners love, right? Because it's about getting away from fiat currency. Gold's going to go up. And like I say, there doesn't seem to be an end to the desire for these people to continue to print money. So I don't know why. And again, this is the one thing that would make me nervous is saying this, but I don't know why gold would stop or silver would stop, or for that matter, you can make the same argument on Bitcoin. I mean, gold has really no more utility than Bitcoin has. It's a store of value if we want it to be a store of value, right? I guess you could use gold to do other things. I mean, jewelry and whatever, it's a soft metal, but in general, for the most part, it's nothing but a store of value and has been that for thousands of years. And now Bitcoin is supposed to be the same thing. It might not at this point have very many uses, and therefore people will make the argument that it doesn't have intrinsic value. But does gold really have intrinsic value? Not very much. And that's worked for thousands of years. So why couldn't it be the same for Bitcoin? I see no reason why it couldn't. There's a few questionable things going on there with MSTR and Michael Saylor and some things that look sort of, at least on the surface, Ponzi-ish, that could affect it. But it's just like anything else. It's not going to affect it if it goes up. It's only going to affect, MSTR is only in trouble to state the obvious, if Bitcoin goes down. Then you got a problem. So as long as this Bitcoin is holding in and going up, then it's all fine. So, like I said, I have a few percent of my savings in Bitcoin because I think the potential for it is certainly there. But Could I also see it become useless? Yes. Worthless, I should say. I could see that possibility. If you can't see that possibility, then I think you're lying to yourself, because what I've learned over 30 plus years in the markets is anything is possible in financial markets and financial instruments. So I'm not saying Bitcoin is going to be worthless, but I'm saying if you think that there's zero chance of that happening, then I think you're fooling yourself, or you're selling something to somebody, because there's never zero chance of something happening. We don't know. The governments could come out against it. Who knows what could happen, right? You would think that the governments wouldn't come out against it, because the Trump organization has decided that they want to invest a lot of money in this stuff. So I wouldn't think that they would come out against it, but
Okay, let's end on one or two trades that you are bullish on, besides stocks.
I think the short dollars is a good idea.
Okay.
Long things like the yen, long things like Canada, I think are becoming good ideas here.
You're going to long Canada yen in Canada. Can you just explain why yen in Canada?
It all just comes off of my positioning stuff. That's where I find people are the most short and the most bearish, and now they're starting to react better. In particular, Canada. I think Canada better than yen. Canada is the currency that people are most short, from what I can tell, and it has started to act well in spite of that. So that means that there's a lot of shorts out there that if it continues to act well, they are going to have to cover their shorts. That's the game that I play. So that's why I like that one. As for the rest of them, I'm looking at things like sugar, cotton, things that most people are not going to be interested in. I don't see much edge in the financial stuff right now, which doesn't mean that I would be short. It just means it's not the time for me, based on what I do, to be aggressively long. I still think that if you are going to be playing in the stock market world, you almost always, not always, but almost always want to err to the long side, because there's upward drift, so why not take advantage of the upward drift, right? This idea, like I said in the beginning, that everybody's trying to find the top and pick the top and call the top and top. It's silly. It's an exercise in silliness, and it has made them look foolish for the last few years. I see the people on your show and on many other shows just come on week after week after week and say the same thing. And they all have their different reasons, the technical part of it, or the fundamental part of it, or, whatever it is. Few people see this and few people see that. And they've just made themselves look foolish, and they continue to make themselves look foolish. Will the stock market go down one day? Probably. But to just continually go on here every week and try and pick the top based on all these things, to me is silly. You err to the long side, and when the market stops acting well, then you can think about pulling back on that. But and it did stop acting well a few weeks ago. It didn't react well to Palantir earnings. It didn't react well to Nvidia earnings, right? But it continues to act, and it didn't act well. Well, those were it didn't act well. But then we had a period where the chances of a rate cut in December went down a lot, and the stock market went down with it. That was to be expected. And as soon as the chances of rate cuts went back up to where they are now, the stock market went right back up. So it just shows you that's really what it's all about now. So if the market stops acting well in relation to the whole idea of them cutting rates and the whole idea of more liquidity, then I would get nervous, and then we can talk about trying to go the other way. But until then, I think it's just silly.
Excellent. Let's close it off here, Jason. Good thoughts today. Thank you for sharing your analysis. Where can we find you?
CrowdedMarketReport.com.
All right, put the link down below. So follow CrowdedMarketReport.com.
On YouTube as well. A lot of free YouTube videos come out on there, so you could search on YouTube for Crowded Market Report on YouTube. A lot of videos that you can watch and tell me what a loser I am and all the things that people like.
We're not going to do that.
I love it. I love it.
Okay, well, you can comment on his videos by going to the links down below and follow his work. So thank you for thank you for appearing on the program. You can also comment on this particular video and say whatever you like, but always good to have you, Jason. Always good to have you. See you next time.
Good to be here, David. Thanks.
Thanks for watching. Don't forget to like and subscribe and follow Jason Shapiro down in the links below. And don't forget to use my promo code LIN, L-I-N, when you sign up to Kalshi, the US's largest regulated prediction market. You'll get $10 on your first $100 deposit using my promo code. So link down below or scan the QR code here.